You guys so much for jumping on this morning. Welcome to our wealth building mastermind call here. My favorite call of the week. So thank you guys all for showing up and being here. And guys, I am super pumped. We have Louis Amaya from Pemco Capital joining us this morning. Louis, how are you doing today, my friend?
Excellent. Glad to be with everybody.
Absolutely. Are you in sunny San Diego right now?
In San Diego, but this time of year we call it June gloom. So it's a little trick before summer starts. So it won't really start clearing up till July. So inland it clears up. By the beach, it still stays a little gloomy, but not complaining.
All right. Well, welcome, man. I really appreciate you jumping on and just sharing some insight. You have done so much in this market. I know a lot of people on this call already know you don't need an introduction, but for those that might be trying to get into the REO space, might be wanting to try, like, why are they on here listening to Lewis? Like, who in the heck is Pimco at this point in time? Could you give us an elevator pitch? Like, give everybody a little background on the things that kind of you've worked on throughout your career and what's led you to here, just to kind of start things off, if you wouldn't mind.
Sure, absolutely. Back in 2000, I'll start at 2000. I was at GMAC, RFC, running their REO group. We were selling about 1,000 assets a month. So I have a very strong background in real estate and REO. As we were heading into the 2006 crash, based on all my discussions with the aggregators, knew we were going to be hitting a wall. So I launched a company called National Asset Direct, and to be a buyer of distressed assets. And we created, you guys may or may not remember iServe company back in the day,
Yeah.
but we created iServe REO, iServe servicing, and iServe residential lending. We deployed $300-400 million in acquisition of NPLs and distressed real estate and managed that through our own platforms. And we had a fairly large REO presence at the time. 2014, I we stopped buying because the bid ask got too wide. So I started Pemco Capital Management with the understanding that the government was now going to be the biggest seller. So with Pemco Capital Management, we've been very involved on the nonprofit carve-outs. As Frida was mentioning, we've done a ton of affordable housing, uh, selling to low to moderate income buyers in California and state and federal carve-out programs, which unfortunately the current administration kind of wiped out all these particular programs. But so about 85% of our assets acquired, we've acquired about 500 million since 2014, mostly late stage foreclosure, NPL. Because we have a strong real estate background, we like assets that roll to real estate. So my partner in PIMCO Capital, you may know of PIMCO Limited, one of the largest REO asset management platforms. So Kimi Yamamoto, who ran that company, we started talking, and all of her business was with the government, and I came from the private sector. So the reason we started working together was to have PIMCO Limited kind of break into the private sector as an investor and asset management company and bring in private sector real estate business. So I'm very tied closely to PIMCO Limited, and Kimmy and their team there. They were the genesis of getting us started. So, we since 2014 we've acquired over 500 million. We're based in North County, San Diego, and we manage assets in about 45 states. Used to be in Puerto Rico. We don't buy in Puerto Rico anymore. And we've seen the market shift several times, and the key to being in this space, as you all know, is your ability to pivot
Yeah.
where the action is. So, we've pivoted a few times from NSO to NPLs to distressed real estate to foreclosure sales, HECMs, and so we're always moving and always raising capital. But I can explain later how valuable our realty network is that makes our business successful. Because at the end of the day, that's where the all the action happens. Well, in this business, there's two functions. You got to buy right and you got to manage right. And if you miss one of those equations, you're going to lose. And part of managing right is having our realtor network execute. It's a two-way street to us, providing value back. So we also source deals from our realtor network. So if I'm giving out listings, I'm going to expect some off-market trades coming in our platform as well. Those that can also originate loans, and I can talk about that in a little bit, add
Yeah.
more value because they can pre-qual themselves and we're not wasting our time. So um,
Did he just freeze up on everybody else? Okay, I just wanted to make sure. I didn't know if it was my internet or not. So I just wanted to confirm. Okay, here it comes. All right, you're back, Lewis. But you're on mute over there, my friend.
yeah, sorry about that. I have a poor internet connection. Apparently, I gotta fix this at my house. But yeah, hopefully you got the gist of it. I think you cut out right at the very end, so I think I got it all.
Yeah. No, man, you've had an illustrious career, right? You've done a lot. You've been, I think the word that you mentioned that I love best is pivot, because this market is constantly changing, and the people that have survived have been able to kind of look ahead and be like, oh, well, let's jump into this space. Well, let's jump into this space. Right. So we're constantly talking a lot about what's going on with the market. And right now, it's a very interesting time. As you heard, we were, when you signed on, right, we were talking about, some things that are moving, some things that are shaking, major price reductions and stuff like this. From my side, right, for the first time in our country's history, our credit was downgraded, which kind of a bell is ringing for me there, right? We have consumer debt at an all-time high. We have default loans at an all-time high. And then we're in this unique predicament that we really haven't foreclosed on properties since 2020 because of COVID, right? Because look, I think people have not been making their payments the whole time, but it's being disguised. It might be loan modifications or workouts or forbearance agreements or whatever the bank calls that particular program. In my eyes, this has to come through the cycle. And lots of times those programs will chew up the equity because it's just kind of tacked onto the back or this. From somebody that's in your position, right? Like, let's talk before we get into business opportunities and stuff like that. Like, let's talk about like, what are you seeing in this marketplace and where are the shifts and changes that you're looking at right now?
Yeah, that's a great question. So since 2000, the Federal Reserve has been kind of artificially manipulating the market, which is causing the booms and the crash. So, for example, in 2000, to prevent a recession from the tech bubble, uh, opened up credit, made credit really easy, created the housing boom, which everybody, from my perspective, I love booms and bust. That's where all the money's made, right? If it's a static market, there's not much going on, but booms and busts, that's where all the money's made. So, we had a great run up to 2006, which created the housing bust. What the Fed did after that was really tighten up credit and artificially reduced interest rates, and kept them low for 10 years, probably 6 years too longer than I had anticipated. And so what that did was, unfortunately, a lot of people lost their homes, and we called them rebound buyers, and they couldn't get back into the market because tied it with credit was so tight. So there was a huge amount of generational wealth lost in 2006. And what happens? The very wealthy and institutional investors came in and snapped all this stuff up. Then we have the housing boom again because of the low interest rates. And then we see these property values double, triple in prices, and a big swath of the market has been left out. And so we have low interest rates. We have these bonds that have been originated at 2 to 3% for 10 years. And all of a sudden, inflation hits because of the stimulus that the government continues to put in to prevent recessions. That stimulus, low interest rates, creates inflation. Um, oh my gosh, inflation's hitting 5, 6%. They jam up interest rates really quick over a short period of time. And what does that cause? The banking crisis, right? You have all these perfectly performing bonds that are paying 3% that are now worth 70% of par because you can buy a bond at 6%. So what we're seeing over and over again is the federal monetary policy put things in place that has unintended consequences. And in my opinion, and I'm talking just generally, and this is kind of the pitch that I give to my investors about being in the distressed debt space, it will continue to keep happening. And because the Fed is starting to run out of tools, for example, inflation is up already a little bit, it's come down a little bit. They don't have a lot of room to jack up inflations if we come into another recession. They can't artificially reduce rates anymore. They can't really tighten credit anymore. So the Fed's is the tools that they have to manage these crises is being reduced over time because they're using them too much, which is going to create crisis in smaller intervals. So you had, a crisis, another one in 10 years, another one in 6 years. Now it's going to be like 3 years, 2 years, and the Fed's always going to be scrambling. So, in my opinion, the distressed debt space is going to be here forever. And so I think from just an opportunity perspective, those different the distressed debt that's going to be coming out are going to coming out in different ways. So again, it's communicating with your clients who are the managers who are putting their own capital out. They're really understanding the market that's going to be coming forward. And who knows, the Fed may have no option but to put rates back down to 2%. Man, if that happens, got another big boom because, as you said, the market has been jammed up for the past 2 or 3 years because there's so many people with 3% rates, no one's selling, right?
Yeah.
You're not gonna sell a house and jump into a 7% rate. That's clogged the market up. So from the origination side, HELOCs, equity loans, that's a big deal. Reverse mortgage loans, those are a big deal. Now, what we're seeing from an opportunity perspective on the real estate side is the fact that HUD are doing these HECM auctions. All that goes to real estate. So those are reverse mortgages that default, and the only way that they default is the borrower passes away. And those have got really big in the 80s. And so you probably all have clients that are now bidding on these HECM loans. Um, those will all go to real estate because they're vacant loans. We buy them, and it's purely a process. There's nobody in the house. So we buy them, we foreclose, 75% go to REO. So there's a lot of opportunities for those who connect with the big buyers on the HECM side, which I can tell you it's Gets It, Beltway, Waterfall. We buy them. But I think that's a good opportunity. But as far as just the general market is concerned, it's can continue to be funky. It's going to be fits and goes and stops until something big happens. The what my primary concern is the national debt. We're about 130% debt to GDP ratio. Most countries start really struggling at 75% debt to GDP ratio. And the more debt we have, the less tools and ability we have to resolve crises. Like we can
Mhm.
only put so much money, we can only put so much stimulus into the marketplace, right? We did with COVID, we did it with the recession, and we haven't even started paying that debt back. So to your point, as far as the debt of the national economy, that's really going to hinder the government from pro producing government programs that will bail people out. And we will for sure be coming to another crisis. I don't know what the crisis is going to be. Guarantee you 2, 3 years, there will be another crisis that's going to spit out a bunch of distressed debt, and the governments are going to have ties or hands somewhat tied as our debt continued to rises. And we're starting to see this already with what Trump's doing. He's basically putting in austerity measures, right? So, like when Greece, when they collapsed, they had to go to the World Bank to get capital to keep their government alive. But the World Bank basically said, yeah, we'll give you a loan, but you got to cut these social services. You got to cut X, Y, Z. What we're seeing with this big, beautiful bill, basically, is a lot of those cuts starting to already happen. We've seen them with all the nonprofit, all the affordable housing, all the low to moderate income housing programs that HUD had wiped out. So we're already starting to see that, and so we're going to start to see people more struggling. I just saw a report this morning. 35% of the people in California can't afford to live in California. I mean, they're living
Right.
under the poverty line. So there's going to be a lot of work. I personally, we've always worked with a lot of nonprofits and housing nonprofits to promote affordable housing and home ownership, and we're going to continue to try to do that. But for those that are astute enough to connect with the right asset managers, and a lot of these asset managers are in our sphere or Larry's spheres of influence, um, those are the ones that are going to be being able to maneuver, raise the capital to acquire these assets, and it will roll down in some form of fashion. So I'm actually pretty, I know it's kind of a funky market, but I'm pretty, as far as, I'm not excited all this happening, but I do think there's going to be some distressed debt coming out in
Yeah.
real estate over the next few years. So it's really just connecting with the right people that are to have the sphere of influence that connects to these asset managers. And there's a lot of smart. I mean, we're small compared to some of the big guys. Uh, there's some really smart guys that are playing it out in the next 5 years. And the key is to like just get your foot in the door with those guys because once you're in and execute, I know for us and all my peers, once we connect to a good agent, that they're gold, right?
Yeah.
If
Because you
you're
don't have to retrain, right? I tell agents, right? There's a lot of organizations that are like, why do you teach people to get into REO? And it's like, look, a new agent trying to get into REO is not my competition, right? Like, there's not a lot of agents that you can say, hey, can you take these 46 listings for me in 2 weeks? That would crumble because agents don't have the right tools, the systems, the ability to scale and operate. So, guys, now while business is lower than what we were used to in the past, you need to be like sharpening your skills, like putting your processes, putting your systems together. So that way, when these days come, you don't have to say no, right? That you have the bandwidth. It might be referral agents sitting in the pipeline. It might be building your team. One, you got to have business coming in today, like because we don't know when this shoe is going to drop, right? Like we don't have this crystal ball, but we see it coming. And so what we're trying to do is position for the next 4 to 8 year cycle. How do we run with this as fast as humanly possible? Increase production, decrease costs, build wealth, do all of these other things. Because as Lewis had said, right, like in the boom and the bust, that is where the most opportunity is for us to capitalize and stuff on. So, I'm thrilled to be partnering, doing more with PIMCO Capital and stuff, and kind of helping them kind of set up for this future, along with a lot of the other like just brilliant minds that are in kind of this coalition or alliance, that we call it in this REO and default space. So I appreciate that insight. Guys, before we dig in, anybody have questions, comments on the market, on the cycles, or anything like that before we go too far down this road and start shifting gears and stuff here? Anybody have any questions that they want to ask Lewis?
One other thing that I would say, obviously everybody, including myself, multitasking, right? You're never relying on one stream of income. Like we buy several different types of asset classes. We have a mortgage arm, we have a realty arm, and you have to have 10 things going and two or three work out. That's kind of the way it works. But I'll tell you one thing. being out at conferences is really important. And Larry will tell you all the best agents, uh, I see it every single investor conference. And the investor conferences are a little bit are brutal for agents because you get a lot of yeah, I don't want to talk to you, I don't want to talk to you, but there are groups there that are constantly there that have built the relationships with the asset managers and they've gotten through that kind of hard shell. Sometimes it's hard to get in. And they've got their business ready to go. Like they're the first call for these asset managers. So I mean, I won't name them off, but they're at the IMN, the single family rental, the NPL conferences, even the secondary conferences, and they're just sitting there meeting with investors saying, hey, this is what we do, this is where I am, this is our infrastructure. But again, you don't put your eggs in all in one basket. Like I said, I got mortgage going, I got my own realty going, I've got small realty, and then we got our capital markets going, and we do some third party asset management. So uh, you know, you're always doing like 10 things, and at any given time, two or three are doing well, right? And that's just kind of the name of the game. So that'd be my only last advice.
Beautiful. So let me ask you this, right? Most of the people on this call are high caliber real estate professionals and stuff from across the country. Where do you see the biggest opportunity for real estate professionals? Like and then I want to jump into your other arms and stuff like that as well on how we double and triple and leverage that. But just from a real estate agent or a realtor perspective, where do you see the biggest opportunities of what they should be positioning on?
Yeah, well, I mean, I can only speak to that on the kind of the default side because I don't necessarily know individual markets on the retail side because that's a little bit different market. I do know there's some areas. I think Zillow has projected a 3% national decline in values, but I did speak with some agents in Florida. There's certain parts of Florida that are dropping 10 to 15% already.
Mhm.
So, and again, that's more of a of an interest rate and lack of affordability issue than anything else. The what we have going for us is a shortage of housing, right? There's still a shortage of housing. So, but
Which is what's keeping our prices, up here. Because if we had this abundance, then we would start seeing the opposite as we did in 2007, 8, 9, right? Where there was just too many homes to choose from.
Exactly, and you would typically think that you would start seeing more price reductions as interest rates rose, but we're still flat. Rates are about 6.5 to 7% these days, and we're still seeing values stabilize. So when we're modeling out, there's certain areas that we see some declines. Some of the places that got overbought, I think some parts of Tennessee, where there was a flood of exodus to certain areas and where prices rose quickly, you're going to probably see some softening there. But I would say, there's going to be an auction announced in late June, 3,000 HECM loans. And I can tell you, based on those portfolios, we're seeing a lot of Virginia, Georgia, Florida, a decent amount of uh, California, always a good chunk in the South, and then spatterings up through the Midwest to Northeast. So that's where we're seeing, and the reason why you're seeing these areas, right? Because these are older people that took out reverse mortgages, and they may have retired in California or Florida or somewhere, warm. A
Yeah.
lot in Texas. We're seeing a lot in Texas. So that's great. We love Texas. So those just from the HECM piece, because that's where I'm seeing a lot of all of our real estate. We're seeing those states from just a defaulted, not a loan default, but a HECM default, which is where they passed away.
Yeah.
Um, but there's certain markets that are starting to decline. I think Texas is a great place to be. Florida as well if you have the right infrastructure. California's a little pricey always. So
Yeah, so in this next cycle, it might be the time to, as the market starts to correct, it might be the time to go buy that, right? As the market starts to fluctuate, we see prices start to pull back and stuff like that because it does go through these cycles and stuff here, guys. So keep an eye on your market specifically. Now, and here's the thing, guys. I'm going to put, I know one of the most common question is how do we get involved with PIMCO's network and stuff? So this is where I'm working with Lewis's team a lot, trying to find them the best coverage and stuff like that. If you're already a part of my REO Alliance referral network, you don't need to reapply at this point in time. If you want to update your stats, I will post a link in here with a new input form. And if you're not a part of of my referral network, make sure that you fill that out, get time on my calendar so we can go through the interview process. I can verify the information and stuff. So I'll put that in here in 1 second so you guys don't have to ask about that. But I ask you, if you're already in my network, right? If you're already a part of it, if you're already receiving assets, like you don't need to reapply for it or anything like that because I already have you in there. But if you're not, like that's where we're always need more coverage. We're going to need better and better agents there as well. Lewis, I know a lot of the agents and stuff that you work with, you've mentioned this a couple of times, you like for them to have some lending experience and stuff like that. And I know, like in California specifically, it's a little bit easier to do real estate and loans all at the same time. And man, this is where like one commission can turn into two, right? And it can just start to leverage. Talk to us about some of the opportunities, especially in California, or if you have other states that are similar to California, where you can where you can leverage those, or how you work with agents in that capacity.
Sure. So one of well, obviously you had mentioned the benefit of being a lender is you're double ending your commission. So a lot of our agents are lenders in California, and so they're taking I mean, we have a couple deals where they brought the buyer, the seller into the loan and just did wonderful. So our mortgage arm is Nexa Mortgage, and the way Nexa Mortgage works is that you don't necessarily have to be licensed in every state as long as your sponsor is licensed in a particular state. So you can get in right away and start just referring the loan. So the way we work it is if our agent is can do loans, we're going to require our agent to submit a loan approval with the offer. What that does is give you the opportunity to get a shot at the loan because you're pre-approving the buyer. If you're not, we would want you to refer to one of our loan officers to be able to get them pre-approved through one of our loan officers, so we'll have a shot at getting the mortgage. There's different ways you can get a lending license.
Did I just lose him again? Did he just disappear? Okay. I was like, I just set my water down and I was like, I'm like, where is he at on my film? All right. He should be popping back on here momentarily as he did last time. But I hope here he comes back on there. You're on mute still, my friend.
My internet connection is bad, so apologies. So
That's all
there's
right.
a
Every time I have to ask, I was like, did he just disappear? Because I like set my water down. I was like, where the hell did he go? Like, but no worries. So,
I
continue,
apologize.
please.
I may have to switch over to my hotspot here in a second. But yeah, so for if you're a realtor licensed with a DRE in California, uh, it's literally just applying for your NMLS, and you can get your NMLS license. And if you're working with us on the lending side, we can give you quite a bit of training on that. And we use our primary partner is United Wholesale Lending, and they have a full week training in their corporate office in Michigan for new loan officers. And then they will at some point invite you out with your top realtor contacts and help you build a loan business. So again, this is talking about, you have multiple channels going at once. You can also get licensed by the Department of Finance. That is a lot of time is easier. So in California, I'm licensed through the DRE and the NMLS as well as the Department of Finance. Uh, and Depending on your situation and what state you're in, um, it most likely is easier to go through the Department of Finance. So again, if you reach out to Larry and if there's interest, we have a program, and depending on your production and your experience, we could potentially pay for those licensing for you to plug you into our Nexa mortgage group. And again, all that does is gives you a shot at getting the financing on the deals that you're doing because you'll pre-approve. You're going to take a listing and you say, for me to submit that listing offer, I need to pre-approve you, and that gives you a shot of getting the financing. Nexa has incredible training as well as the United Wholesale Lending. They have a whole academy on training you how to originate loans. For those who sell real estate, uh, it's you're looking at the same numbers just in a different way, and it's not that difficult. Also, the great thing about mortgages, it's not a face-to-face business. You could be doing loans in several states from your house, and you're not having to drive around and show properties and stuff. So it's definitely something that you can add to your toolbox. And I would highly recommend it because you may sell 10 homes and get the financing on three or four, and get 2 points on the listing, getting 3 points on the, or 2.5 points, 3 points on listing, 1.5 to 2.5 points on the lending, and that's not a bad deal. So
Yeah.
any buddies that's interested in learning more, please reach out to Larry. Larry, let me know, and then I could put on a conference call with those interested, and we can really take a deeper dive into that. But be happy to connect with any of those because we're looking to drive more mortgage origination because I do think over the next not immediately. Everybody's saying rates will get down about 6%. If it got down to 6%, that's going to create some activity. Um, and there's also lots of HELOCs to do because everybody has a lot of equity. And then of course you're doing the financing on your own transactions, which you're double ending the commission. So and it's not a lot of work and it's not that difficult. So I would highly recommend it.
All right. So looking ahead at what's next, right? Positioning, especially, if you're in, let's call them the sunshine states for the reverse mortgage portfolios. It's what I heard Lewis say, is going to be a lot of opportunities, making sure that you're in front of the HECM, the USDA. And then, as he talked about, right, like diversifying. Right. We've all seen those REO agents that lived and died by the sword, and they were the biggest agents in their state, and then some of them are non-existent at this point in time, right? So this is where we have to have the staying power. And I applaud a lot of you guys, that I see on here that man were carrying 30, 40, 50 listings last year, right? And inventory is kind of pulled back in your state and you've diversified. You're talking to probate, you're actually getting on the phones. Like, I cannot applaud you more for looking ahead, and because you're still positioned with all of those other companies, and when that wave comes back, now your business is going to double. That's what Lewis is talking about here, right? Like, what if you're building all of this and you have a side company? Like, my goal is, how do we make as much money as possible without working, having businesses, having constant flows and stuff coming in here, and that's what he's talking about. So if you have any interest on the mortgage side of things. Again, certain states are easier, but I'm happy to make some connections with Lewis, and like, you guys can talk through that because there are some big opportunities there too, especially if you're growing a group or a team or something like that, and they're all sending their business and stuff to you, or even if you just want to build a better relationship with PIMCO Capital, because the more value you add to them, the more value they're going to add back to you as well. even if you're like, Larry, I don't want to be a damn loan officer or this or that, maybe it's just driving business to Lewis and his team to pre-qualify your buyers to build a bigger relationship. So this isn't a one size fits all, right? Like we got to look at your business plan, your philosophy, and then see where they align if you want to do more business with PIMCO Capital and stuff here, because they've been an
Yeah.
amazing partner at this point in time, and we're looking forward to doing a lot more here in the near future.
What I think is really important, and you just touch on this, all for me, all the business relationships that I develop with title, with valuations, with whomever, I try to make it a mutually beneficial relationship. So for us, when we're working with agents, not only we expect you to do a good job on our assets, but if you have an off-market deal that you can show us that provides benefit. If you're referring loans to pre-qual to our mortgage arm, that provides a mutual beneficial relationship. So in this market, it's all about mutual beneficial relationships because it's kind of a funky market. You got to be diversified, doing several different things, and you can't look at an asset manager as just getting a listing. You really got to look at an asset manager as saying, how can I provide them an additional benefit that another agent may not? That's a big deal. I mean, when we see that from agents, we become very loyal to them because they understand that, hey, this is a tough market for everybody. So everybody's always scrambling on what they're doing. And then lastly, um, I can send Larry a list of the largest asset managers that are buying HECMs. And if Larry chooses to source that out to you guys to start building those relationships, um, I I would get going on that right away because the Heckham's not going away. That's gonna be a big deal for forever because the reverse mortgages have only gotten more popular. So that's gonna be a quarterly, or that's gonna be a 2 or 3 times a year auction, 3,000 assets at a time. And if you start working, getting connected with these asset managers, and a lot of it's getting face to face, a lot of it's being at these conferences and just getting in front of them somehow, because it's really hard for an agent to get in front of an asset manager at these conferences. But if you're persistent, I'm telling you, any asset manager who connects with a good agent, they're locked in. If there's an asset in their area, you're going to be their first call. But it is a grind to get in front of them. But uh,
And this is where, like, if you're at these conferences, guys, don't go there with your hand out being like, oh, I'm in this area, I can take your listings, right? Like, what's going to make you different, right? And this is where, like, PIMCO Capital just gave you like the keys to their heart. Right there, he's telling you his love language is, getting off market deals, right? Leveraging and sending business to his lending arm and stuff like that. Especially as this market fluctuates, he's telling you his love language. Every client is going to have a different love language, right? Some of them might have a preservation company, right? That they're looking to get off the ground. And so if you could drive them more business, then that's going to help them out here. Some are going to have, a private money lending arm that they just work with investors and stuff on. And that's going to be the key to their heart. Some are going to need evaluations on all of these properties. Some of you guys have done this as well, where you're evaluating properties for a PIMCO that they're looking to acquire, right? If you're coming back and saying, well, look, I need $50 for this evaluation, there's a line of other agents that are like, Lewis, don't even worry about that, man. We got you covered, right? I'm going to take care of you. Like, just take care of me if we actually acquire it, right? So this is where, like, don't think about what's in it for me. How do I add more value to where it is a damn disservice for them not to do more business with me? Like that is the mindset and the mantra and stuff that you want to go into. Anything that you want to add on that, Lewis?
no, and that's exactly right. And if you have if you're running your business and you have a pipeline, it makes it a little bit easier to do those types of things. So it's important to be diversified, have a good pipeline, and execute. Execute is just really being face to face. I can't tell you how important it is to be at these conferences, because getting face to face makes all the difference because asset managers get a boatload of calls. And so trying to make it to these, single family rental conferences or the distressed asset conferences and getting in front of some of these folks will pay. It's a long game, right? It's everything's a long game. So you're planting seeds now, and pretty soon you'll have a pipeline, and your long game's paying off, and your pipeline's starting to execute, and then you can just keep doing it over and over again, and just keeping that long game pipeline stacked. That's what I do. It's like the affordable housing stuff went away, right? But I've got a pipeline of deals and other things I've been working on for a couple of years that are going to start kicking in. That's the key, is just to make sure you get your pipeline diversified business. So that'll enable you to be more flexible on getting some of these transactions done and spending the time on them.
Yeah. Solange, are you listening to this? We were just having this conversation. I was like, look, this is about the long game. This is the 4 to 8 year plan to set up the rest of your life, right? It's not about like, oh, like nothing this month. Like that's bullshit. Like, no, like that's what the majority of agents will do, right? They get to that fulcrum or that tipping point and they will stop just as it's starting to gain momentum and stuff there. And that is where you need to see this through, guys. There's going to be so many opportunities and stuff here.
It's funny you say that because it's not the smartest people in the room, it's persistence.
Mm,
I've seen so many guys and girls that just are at it every single day, and all of a sudden they knock it out of the park. And I've seen so many smart people do a couple of trades or whatever, and they're like, "Oh, this is working. I'm getting out." So yeah, it's just persistence, and it's hard, but it'll pay off.
yeah. We talk about on this call a lot, like success isn't sexy, right? It's consistent.
Exactly.
It's doing the same shit every single day. Like you get bored, and that's where distractions start to come in and you start to go off course. And right, you need that accountability partner to bring you back on and be like, what are you doing? You know the plan, right? Like run the play every single time over and over and over again, right? Like, if the Eagles are on the 1 yard line, they're doing the tush push, right? The NFL tried to stop that play because they were so efficient with it and like it got turned down, like, and rightfully so, right? They know their play and they're just really good at it. Like, this is where, man, tell somebody your play, right? Like, look, this is what I'm going to do, and I'm still going to kick your ass because I'm going to add so much value to other people at the end of the day.
Yeah,
Um,
people look at the see people at the end game and go, how do they do that?
yeah.
And it's 20 years of failing, doing it again, failing, doing it again, tweaking it, failing, do it again, failing. I mean, my failure to success rate is like horrible, but that's the way you do it, right? You just do it over and tweak it, do it over again, tweak it, tweak it, tweak it, tweak it, and then it finally hits. But then people look and go, man, how did you build that business? You do it overnight or something? Like, no, it took me 20 something years to
Yeah.
keep
Oh, you
going.
got you got so lucky by meeting them, right? Like, no, that was
Yeah,
40 conferences of being rejected for 30 of them, then getting a
exactly.
conversation and then following up and remembering things about that conversation and doing this and doing that, right? So, yeah, that consistency is a huge piece, guys. And so I know that we're running a little bit short on time here. I want to leave a few minutes for any questions. If you have those, start thinking about those. But Lewis, any closing notes on your side, man? This has been so insightful. I will make sure Kathy will take this down. We'll put this up on YouTube and stuff like that as well. But any closing notes or anything like that that people need to be thinking about, Lewis?
not really. I think getting involved with a group like Larry's, where he has done a great job of building a community that supports each other, that can provide valuable information back and forth. And he's not only brought in agents, but asset managers to this group. This is the stuff that will make a big difference. So I would say, continue being part of this community, or a community that is just not bringing in the same people, right? They're bringing in different parts of the business so everybody can collaborate because agent information to us is very critical because you guys are the boots on the ground. And sometimes, I'm so far away from the asset, I forget, I'm not thinking about certain things. So the feedback that we get from agents is kind of keeps us grounded on, okay, at one particular asset, this is how it's going, where versus, we may be working 100, 150 assets. So yeah, I would just say the community that Larry built or other communities that bring in managers, bring in different parts of the industry, and I would be bringing in some mortgage folks, and just collaborating like that is gonna make you successful.
Beautiful. I love it, guys. And we do have a great group, and I appreciate all of you guys kind of being on here as well. One thing that I want to make sure I point out, I see some big folks like Jerry Stapp, Joseph Limo, Lawrence King that are in California, right? Like think about, how you use kind of that mortgage side in California, and I'm happy to connect you guys because I know that you guys have large groups of agents and, if you guys can make them more successful, it's just a win-win for everybody. On closing notes, anybody have questions, comments, concerns, or anything else for Mr. Amaya before we wrap up for today?
Yeah, first I wanted to thank you, Larry, for putting this on every week, man. Consistency is the key. And Lewis, man, thanks for dropping that knowledge. I too am from San Diego, and I have one right now with Bryn out in Campo. We're in the lockout stages, and
Oh, awesome.
absolutely wonderful to work with. Just a fantastic group of folks. Thank you for everything you do.
Absolutely. Well, thank you so much. I appreciate it.
Wonderful. Anybody else? Questions, comments, concerns?
Yeah. So if we wanted to get involved, because I've done business with PIMCO, I've met Bryn and some of the other people. But if I want to get more involved with PIMCO and maybe on the mortgage side, at least referring business, do I email you, Larry? What do I do?
Yep, email me and I will make sure that I put you in connection with the resources and stuff like
Okay.
that. Whether it's Lewis, like if there's a group of you guys, then maybe we'll do a group call with him and stuff like that. So let me filter through
Okay.
my emails over the weekend, but just shoot me an email and then I will make sure that everybody gets connected and stuff there.
Okay. Thank you.
Anybody else? Lindsay, thank you so much for the feedback and stuff there, guys. And look, here's the thing. This feedback that you guys are getting me tells me that this call added value, right? Same thing in your business, right? When your business starts to increase, it tells you what you're doing is working and stuff there, whether it's prospecting, cold calling, whether it's open houses or anything else. Observe kind of the numbers, like the size of this group, right? Some of you guys were on here with me when we had 3 people, and it was like, shit, is this worth it type thing? But it was that consistency in building this, get to 50, 60, 80, 100 people and stuff like that. So follow your numbers, right? Track and measure what you're doing, add massive value and stuff to others and stuff there. Lewis, I can't thank you enough for your time as I know how valuable it is. And I had posted the link a couple of times. If you're not already in my REO Alliance referral network, make sure that you get on that. If you're interested in anything else with PIMCO, email me and I will make sure that you're connected and stuff with his team. So you guys have an amazing week. Go out there and crush it. And if I can do anything at all, call, text, or email me.
All right. Thanks, Larry, for putting this together.
Absolutely. Thank you, sir. Talk to you
Okay.
guys soon. Bye bye.